Hey, Bulls and Bears, we are back with another dose of economic reality. It is Monday, March 20th, 2023. Thank you for being here. Huge layoff announcements to get to today. A lot of other financial economic news. We're going to get right into it here in just a minute. First, we've got to talk about the stock market. The stock market today, even with all the financial crisis that's unfolding, the bank failures, all the shenanigans out there to keep this this failed banking system propped up. We have all major indexes in the green today. The Dow Jones up 1.2%. That was the biggest gainer of the day. All indexes in the green. Tell me, does this make any sense? It doesn't, right? So I think most of us know that the economy is completely detached from the stock market, the real economy and the stock market, right? They could click a button and push the stock market to all-time highs. And also, there's so many insiders getting just filthy rich out of the stock market with insider knowledge. Today, an article: wealthy executives make millions trading competitor stock with remarkable timing. And it goes in to talk about how the insiders, they know exactly when to buy, when to sell, when to short the market. So it's a rigged game. So if you're trading stocks, buying stocks, selling stocks, if you're a day trader, swing trader, you're playing against people with insider knowledge. So good luck with that. That's why 90% of traders fail. Now, if you invest for the long term, if you sit and wait, you're patient, you wait until the big drop happens like we saw in 2020, huge drop. Was it 40% off the Dow Jones and most major indexes, 30 to 40%? If you would have jumped in then and just held, then you would be sitting pretty well. But we're talking about the people that try to trade stocks frequently. Right now, here's another headline that backs up what we've been talking about here pretty frequently. ABC News: the Fed was aware of Silicon Valley Bank problems more than 1 year before its collapse. The Fed cautioned the bank on multiple occasions, ABC News confirmed. What did I tell you just a few reports ago? I said this is a planned collapse. There's no way these people could be that stupid and not know what's going on with the leverage here in the banking system, the fractional reserve loaning out money that they don't have. The fact that people can take money out of the bank and the bank won't have it. You think they didn't know this? Of course they knew this. They set these policies in place on purpose to make the economy look better, to try to fool everybody. Hopefully nobody here was fooled. We're going to talk about that, plus the huge layoff announcement. First, a quick word from our sponsor. Take a listen. Noble Gold Investments have made it their mission to stay on top of the most important news. 3 bank runs in less than a week. These are the second largest and the third largest runs in history. The government is taking steps to guarantee all deposits. That means more money printing. Plus, the Fed is sitting on $1.2 trillion in losses on their $8.3 trillion bond portfolio. And the Fed will continue to raise interest rates even if they tank the economy. Do you know who are the only ones that are not afraid? The ones who are invested in gold with Noble Gold Investment. Gold is the most stable asset outside of any government control. Thousands have approached Noble Gold Investments to get their hands on gold. Hurry and go to bullboomgold.com to secure your wealth now and get a free 5-ounce America the Beautiful coin with each gold or silver IRA if you qualify. Go to bullboomgold.com, bullboomgold.com. You can also see the link in the description of this video and down in the comment. And also, real quick before we move on, people that were asking about Noble Gold, this is actually physical gold and silver you could be investing in with your 401k. You buy it with your 401k, or it's in your 401k, but it's physically set aside in storage. All right, so let's move on here. Let's talk about this article out of ABC News. It is what we've all known here, but it's interesting to see ABC News actually just admitting it like it's no big deal. The Fed was aware of the risks more than a year before its collapse. ABC News confirmed following a report here. The Wall Street Journal also reported the Fed cited risks to Silicon Valley Bank's management as early as 2019, 4 years before the bank's collapse. All in all, the Fed cautioned the bank about its concerns on several occasions. A 2021 review, the Fed identified significant vulnerabilities in the bank's containment of risk, but the bank did not rectify the weakness. Of course, nobody gets in trouble the people at the bank received huge bonuses before the collapse, right? You see what I mean about this excellent timing, right? They know exactly when to pay out the bonuses. They know exactly when to buy and sell the stocks. Not so much, with you and I, we don't get those tips. And if we did, I'm sure we'd have somebody knocking on our door, if you know what I mean. All right, well, let's get into this huge layoff announcement. We told you the layoffs were not going to stop. We're not even going to slow down. We have, first of all, Foot Locker closing 400 doors. This is not even the big one. 400 shops, rather, through different malls, 400 stores through different malls. Here is the doozy. Amazon, another 9,000 layoffs. Another 9,000 layoffs. Wow, I thought we were in an economic recovery. Why do we still see these layoffs happening? And now with the banking crisis unfolding, how many more layoffs are going to drop? It's going to be brutal, folks. It's going to be a bloodbath of layoffs. And if all the banks aren't rescued, that's going to be a lot more jobs lost, more loans that can't be given out, and that's going to be less demand in the market. Less demand equals what? More layoffs. Less people out spending money, swiping their card, borrowing money, more layoffs. But JJ, they said there was an amazing jobs added number. Didn't you see it? Yes, I saw it. For those of you that haven't been on this channel, I've got some new people here. Thank you for joining us, by the way. For those of you that don't know how it works, the jobs added numbers don't subtract people that are quitting their jobs. They don't subtract people that are fired, people that are laid off, but they just add on when a job's added. So somebody gets fired from one job or laid off, they go and take 2 part-time jobs. That's 2 jobs added, right? So you see how the numbers are also manipulated, just like the markets, the numbers are manipulated to make you think that everything's fine, that everything's going good. That way you'll be caught flat-footed when the serious events really get here. So now they're telling us that the bank issue, the banking crisis is contained. The backstop worked. Everything's fine now. No, everything's not fine. This is just the first shoe to drop as far as big failures. There's going to be a lot more coming down the pipeline here. Let's find a bit of good news here in this mess. Oil down below $68 a barrel. Below $68 a barrel. I still think this summer is going to be brutal for the cost of oil and gasoline. I hope I'm wrong. I hope we see crashing prices like we saw in 2020 with the negative oil price. Remember when oil went like negative $40 or something like that? So that just shows you what happens on the paper market. And then you look at the real cost of it. But that's how prices could be manipulated. Things can go even in the negative. Pretty crazy, pretty amazing. Right, now let's talk about how bad this could get. This could get to Great Depression 2.0 levels if a lot of these small banks implode or are allowed to collapse. Even if they're rescued, it could bring in a lot of problems. Take a look at some of these numbers. Small/medium banks account for 50% of U.S. commercial and industrial lending, 60% of residential real estate lending, 80% of commercial real estate lending, and 45% of consumer lending. So yes, there's the big mega banks, the too big to fails, but there's just so many of these smaller local and community banks. They do make up a very big chunk of the whole market share as far as lending goes. The big one is the 80% of commercial real estate lending. So can you imagine if we had some sort of banking collapse, how quickly the economy would implode, considering the magnitude of the footprint of these banks in the market? Someone actually put that out on social media, and Elon Musk even replied to it. There's this whole story about how he replied to it here, and he says this is a serious risk. And the posting was about another Great Depression if this was allowed to happen. Elon says it's a serious risk. All right, so is he just talking to make the news again? And a lot of times when people hear that, they think it's over exaggerated. They think that it's just fear thinking or negative thinking. But think about if they pulled back all of the help that people are given, all the money that's given out, all the forgiveness, and how much worse it would be now compared to the Great Depression. Back in the Great Depression, more people farmed. Half of the houses had some sort of farming or productivity that they made or that they engaged in right from the house, whether it was having chickens or farming or growing stuff. A big portion of the population back then was self-sufficient. and they could also then help their neighbors, and maybe they can trade stuff with their neighbors or people down the road. Now, hardly anything manufactures anything. Less than 1% of the households do any sort of farming or growing or anything like that, any sort of production of their own food. It would be way worse than the Great Depression. And people say, well, we don't see people waiting in soup lines. Well, no, because the plastic cards that they send out are the new soup lines. Um, so it's going to be a lot worse if this is allowed to happen. It's not just me saying that. Elon Musk now says it's a serious risk, right? So what are we headed into this year? I mean, we're only in March and we already see the banks beginning to collapse. Could get very interesting, for lack of a better word. Now, I've said on this channel for a long time that how is the Fed going to be able to raise rates with this much debt in the system, with the consumer, everywhere you look, debt? If they couldn't raise rates before, and they had to have rock bottom interest rates ever since the financial crisis, then why would they be able to raise rates now with debt that's way above where it was before? It was impossible, and it's just going to continue to unfold. You know it, I know it, we know it. So we're just going to continue to prepare for this, folks, and watch this thing unfold, hopefully from a nice, safe position. Grab your popcorn, because it's going to get crazier and crazier, and not crazy in a good way, unfortunately. There's going to be some sitting back, watching things happen, eating popcorn, but this could be showing up at our doorstep very, very soon. Also, bank consolidation. Just we talked about that, a couple reports ago. Credit Suisse bought out by UBS. We're going to see this happen in the U.S. We're going to see the big mega banks get much, much bigger. We've got FedNow payment system coming out this summer. We're going to be going ultimately to a digital dollar. It's going to be a whole new level of control and no privacy whatsoever. Controls on your spending, what you could spend, where you could spend, how you could spend, how often you could spend. And it's going to be nightmarish, folks. The other side of the coin is there's some people out there that want to see a metals-backed currency. So we're going to see how this battle goes, how this teeter-totter goes back and forth, who's going to win. But hopefully people will understand what's going on and support the metals-backed system of money. We're going to be seeing some things roll out before that, though, that are going to really be pretty scary and maybe even hard to make it through, right? So everybody keep stacking. Hope you're well. A big love. Bye for now. Link down below to our link down below to our sponsor, description, and in comments. Big love, everybody. Bye for now. Peace.